marginal rate applies because the family's economic strength remains that of the parents. Same thing repeatedly, but in a different way. So, gifted tax versus kiddie tax, two separate questions. So, gifted tax is asking, can the asset be transferred? Say, answer to that question will be in the affirmative only. It governs whether the transfer of asset itself is permissible and what transfer tax applies. So, gifted tax is only asking in a very limited way. You engage the best of the attorneys in the country and you have the gifted tax drafted, but KD tax will not be based on what is the content that you have in the gift tax. See, when they understand that it is a diversionary tactics adopted by the taxpayer just to lower the tax rates and thereby bring out tax saving through these sort of measures, KD tax will be applicable. So, how should the income from that asset be taxed? It governs the rate at which the resulting income is taxed, regardless of who legally owns the asset. That means KD tax is a supreme tax when compared to gift tax. See, even though you would have paid gift tax, diverted the property in the name of the child, but still the income will be taxed in the hands of, I mean, always unearned income will be taxed in the hands of the parents. So, by doing this, we would only tell the taxpayer, why did you spend money on gift tax? You could have avoided. See, the intention of paying gift tax is only for the purpose of tax saving. When that is not happening, gift tax itself is an expenditure then, and nobody is going to give credit for that. So, therefore, if there were to be such ideas in the minds of the taxpayer, as a tax professional, you got to tell that such action will never be taken up lately by the IRS, and they will summarily bring such income diverted in the hands of the parents at their marginal rate. So, from the beginning till this particular moment, I am just only telling what is there in Kiddie tax. These are separate provisions with different objectives. A legally valid gift does not override the Kiddie tax. So that means Kiddie tax is supreme. Congress has also enacted separate anti-avoidance rules for trust used to achieve the same income shifting results. See, this is also a very important matter, the last one. So, where taxpayer being wealthy parents, what they do is that they will give it to a trust. So, therefore, there is no relationship between the taxpayer and the trust. But the trust is using that money for helping the kids of these parents. So, whether you do it directly to the kids or route it through a trust, the result is going to be the same. So, therefore, if you do all this, gift tax will be an additional expenditure, creating a trust and filing income tax return and spending for the trust, that is formation of that trust, and whatever money that you spend, nobody is going to give any sort of recognition, and ultimately kiddie tax will be supreme, and that will prevail over this trust. So either